Hello and a warm welcome to this month's edition of Telco Talk. I'm Natasha Jacobs. Now, according to a recent international survey by research company Vanson Bourne, in which they surveyed 1,600 business leaders from 10 emerging market and developed markets, 74% of business leaders in South Africa stated that they look to other emerging markets for growth lessons and best practice, highlighting the growing influence of developing markets in the global economy. With this in mind, what are some of the strategies South African business leaders should be looking at when focusing on expanding into other emerging markets? Joining me in studio today to give us their views are Sunil Joshi, CEO of Neotel, Andrew Sneed, Partner and Regional Head of South Africa at Delta Partners, and Terry White, Business and Technology Advisor at CXO Advisor. Gentlemen, good evening and welcome.
Good evening.
Sunil, let's start with you. Let's put things into perspective. We've seen a fundamental shift in the way the world does business, especially when it looks to expansion into other territories. With developed countries and zones such as the Eurozone and the US still in financial turmoil, how important have developed nations and economies become from an investment and expansion perspective?
Well, that was the precise question that we asked Vanson Bourne to do for us, because Tata Communications and Neotel both initiated the survey as an independent survey. And what we found was something we knew, but we had specific data points that said many enterprises, whether it's mature markets, but also now even in emerging markets, are looking at other emerging markets for growth opportunities, to learn best practice, as well as lessons learned in the context, but also for innovation. And surprisingly, innovation came out as one of the more important areas that people look to emerging markets for, considering the fact that you don't have the same infrastructure that you would in mature markets, and therefore it forces businesses to innovate in order to be successful in those markets. And that was quite an interesting revelation for us.
Now, besides innovation, which Sunil has mentioned, Delta Partners obviously focuses on emerging markets and territories. Yeah. From your perspective, what are developing markets bringing to the table? What is enticing developed nations to look towards investing in them?
Yeah, I think ultimately, one of the key factors is that of growth. I think what people look at when they see Africa is one of the highest growing regions in the world. If you look historically, Africa has grown at approximately about 7 to 8% GDP per annum in the last few years, and that growth is expected to continue. And obviously, when you compare that against other regions, it has an attractive nature to that. Beyond that, at a macro level, if you look at some of the specifics linked to that, is the emergence of a growing middle class. Africa is now a population of about 1 billion people. Around 300 million of those are now reaching middle class, spending somewhere between $2 and $20 per day on consumer items. So that expansion of the middle class is opening up opportunities. And I think in reality, people are seeing Africa as a more stable environment in which to invest. Obviously, there's been concerns regarding transparency, political stability, financial stability. And whilst some of those might continue and might remain, I think a large portion of those are improving, and therefore Africa as a continent is definitely catching the eye of investors and businessmen alike.
Terry, we've mentioned Africa, and we know 6 out of the 10 fastest growing economies are situated on the continent. But it's not just about developing nations investing in developing markets. It's also about developing, investing and developing. As an operator who, as a company who understands the African market, are you seeing cross-pollination of African nations investing in each other, let's say South Africa in Ghana or Nigeria?
Yeah, we're definitely seeing cross-pollination, but I think it's cross-pollination of learning as much as anything else, and cross-pollination of understanding of operating in different cultures. It's a very important thing. Just in terms of the growth that we're learning as well is the South African markets are looking to the emerging markets in Africa for growth in terms of being able to get into a nascent industry and grow with that industry. So they're looking for first mover opportunities, first mover advantage, so that they can grow with the industry rather than grow with a specific market. They grow with the industries.
Now, Sunil, as mentioned, you mentioned it as well, that Tata Communications, your parent company, commissioned the Vanson Bourne study. As part of the survey, emerging market respondents were asked from the traditional BRIC countries, South Africa and the Middle East, which markets they felt offered the most opportunity. China, of course, top at 51, yes. India at 46, Brazil at 26, and South Africa at 18. With numbers like these, it's clear that South Africa is an emerging market force to be reckoned with. But does this have correlation to our inclusion in BRICS, or are we just a destination of choice?
Well, I think it does. South Africa is now part of BRICS, and it does give South Africa a very unique and interesting opportunity of leverage. One, of recognition that the potential in the market as an emerging market does exist, but second, to also now compete with, for the investment dollar or rand, with some of their larger peers, and how do they attract investment within the geography, and how do they leverage that for their own expansion. But in addition to that, uniquely, interestingly enough, each country, when they say where do they find the biggest opportunity for growth, China said, I find it in China. India said, I find it in India. South Africa also said, I find first the businesses find opportunities within their home geographies. But then they also said, in addition to my home geography, I do find growth opportunities in, for example, China chose a lot more on Brazil as an area. India chose China and selected growth opportunities. South Africa, less than 50% said South Africa has enough opportunity for me, and then the rest said China and India present growth opportunities for those businesses. So it's akin to the question you just asked around cross-pollination, but is where South African businesses are seeing growth potential. They're certainly continuing to see growth potential within South Africa, and that's taking a lot of their time and effort, but they're also seeing growth potential in some of these other markets that they now see, part of which is Africa itself.
Is it because they understand the market fundamentally? South Africans, we feel safe within South Africa, and perhaps China, India, Brazil, more risky. Maybe I don't understand the market as such. Is it because we know the landscape we're operating in?
I think to some extent one always favours the markets in which you understand the most. And I think to Sunil's point, I think the reality is that different companies have different priorities. I think first and foremost, a lot of them are looking at to see what they can do in their home markets. But obviously, as they continue to want to expand, to be able to drive growth there, inevitably looking into other markets. And depending on the relative industry and focus that company is prioritizing, then the inevitable countries of choice will vary accordingly.
Now, Terry, when you move into different markets, we've seen there's a traditional checklist you look at. Government regulation, infrastructure, communication infrastructure seemingly very important. And in the Vanson Bourne study, it says that 11% of survey respondents cited reliable communication infrastructure as a growth factor or a reason to look at to invest in a company. That said, do you think that telcos operating within these various companies are operating in, do they understand the importance of the role they play and function in attracting foreign investment?
I think in terms of, if you look at the figures, the mobile telco infrastructure is the important one in Africa if we're looking. It's interesting that fixed lines in terms of South Africa, I think we're about 8.7% penetration of fixed lines, and then it just goes downhill from there. Whereas in the mobile environment, you're dealing with, to a large degree, in the 50s, and very few African countries are less than 30% penetration. So it's a dependence on a mobile infrastructure, yes, but if you're dependent on a mobile infrastructure, you have to structure the way you do business around the infrastructure that's available. So you cannot take a developed economy stamp and just place it into a place that doesn't have that infrastructure in place.
And speaking of infrastructure, that one of the biggest challenges is the regulatory environment. Sunil, as an operator, is government doing enough? Are they putting the right policies and framework in place for this growth and expansion in building the right infrastructure and not just trying, as Terry said, to copy the model from a developed to a developing nation?
And I think infrastructure is in almost two parts. First is the government has to create the framework that enables competition in a geography and enables every service provider to be able to ubiquitously go and provide their services to its target market, be it consumers in the case of mobiles or businesses in the case of fixed converged infrastructure like ours. We've been working very closely with DOC and ICASA in working through the necessary changes over the last 5 to 6 years that we've been in South Africa specifically. But regulatory frameworks do play a very important role in businesses in general to invest in a geography, especially around emerging markets, because mature markets are seen to be more deregulated and re-regulated thereof, and the emerging markets are almost playing catch up, but creating an environment for businesses to grow. But equally important becomes businesses like ours to then invest within the geography to be able to create the infrastructure that then can be leveraged on products and services. And just coming back to one of the points that Terry just talked about is, it also depends on the business's target market that they're really intending to cover. And that's where a combination of either mobile or fixed or both become necessary. But what businesses are looking at is they're saying, I have a certain infrastructure in mature markets that my business operates in if I'm a mature market business. Therefore, is that same infrastructure available in my target emerging market? And if it's not, how do I deal with the disparity between the two till such time the emerging market infrastructure gets to parity basis? Whereas on the contrary, emerging market businesses know that the infrastructure as they see it and mature doesn't exist. And therefore, when I do have to expand or invest into another emerging market, I know that I will not get that. Therefore, what infrastructure do I have? How can I make the best to be able to make an entry into that certain geography? So it's a combination of many factors, and also the experience and knowledge that a business brings to bear of another market based on their experience in their home markets.
How do you make sure that you tie in with the right business who understands the differentiating factors between these markets, that when you do take your company over, that someone understands your needs but also understands the market that you're operating in?
I think probably as a rule of thumb, there are probably two key points that will differentiate more successful entries into markets against unsuccessful ones, and that's principally around one, having local partnerships. I think that's critical. I think it's very difficult for companies to move into new territories on their own without having local partnerships, and in many cases obviously that's a legal requirement as part of local ownership's rules. Secondly is having local presence on the ground. Even once you have local partnerships, it's not enough to operate at full arm's length, and I think that anybody or any company moving and expanding across the different African regions needs to keep those 2 points front of mind.
Well, gentlemen, I'm going to leave it there for now. We're going to a short commercial break. More telco talk when we come back. Stay tuned.